Barclays just posted their numbers minutes ago. The bank posted a fourth quarter profit that missed analyst estimates as the firm recognised higher costs for deferred bonuses. Fixed income trading rebounded less than some US rivals. We are joined now, though, by the CEO of Barclays, Jes Staley. Jes, great to have you on the programme. And I want to start with one of the positives that no doubt you're pleased with from this report this morning, closing the non-core parts of your business early. Tell us why you're able to do that.
You know, part of the strategy of last year in 2016 was to accelerate the closure of non-core so we can free Barclays from the legacy assets that we want to exit and focus on the core franchise of this bank, which is a transatlantic consumer, corporate, and investment bank. And I think we made a lot of progress in terms of closing the bank in 9 countries last year, getting out of retail banking across Europe, getting out of Asia wealth management business. All the efforts of last year means that in June of this year, we will no longer have a non-core business unit in Barclays. In the second half of 17, this bank will be what it wants to be in the future and allow us to look forward. So we look forward to end the restructuring of Barclays that has been going on for years in a matter of months. And I think our shareholders will respond well to that.
There should be some relief around that story. Tell us a little bit more about one part of the business that you've definitely been very keen to hold on to and to maintain, and that's fixed income. The FIC business, I see revenues up 33% there, not quite on a par with what some of the US majors managed or what the estimates for your business were. How happy are you with the FIC performance?
I'm very happy with our FIC performance, and I think the fixed income credit areas of Barclays did very well across 2016. One of the things you'll notice if you look at our credit and fixed income trading across the entire year, we tend to have what's called less beta to the market. We tend to have less long-term positions, and so when the credit markets rally strongly, we'll slightly underperform some of the desks that tend to have more capital on focused on that business, where we are much more of an agency profile. And so when credit markets traded off like they did in the first quarter of 2016, we did very well versus the U.S. competitors. But overall, very much liked how the investment bank performed. You know, in 2016, if you take M&A fees, debt underwriting fees, equity underwriting fees, we were up year over year. One of the few investment banks that actually accomplished that. So we think we gained market share in 2016, and we liked how we performed in the fourth quarter.
Some commentators, maybe even shareholders, wanted you to more aggressively shrink or reposition the investment banking part of Barclays, Jes. You were very keen to hang on to it. Are you happy with the decision? A year into your tenure, really, or more than, are you very happy with the way you've taken the strategy?
You know, our going back to the core investment banking revenues, we ranked 5th in the United States in 2016. That was up 1 slot from 2015. We were 3rd in the UK. We liked the progress that we made. We very much like the balance of having a strong consumer business, particularly in the UK, where we have an incredible a citadel position, if you will, balanced with a wholesale business or a corporate and investment banking business. Anchored in London and New York, but with a global presence. So we like the balance that gives to our profile as a company, and I think it's a strategic advantage for Barclays.
You've mentioned some progress around your stake in Barclays Africa this morning. Update us on the time horizons. What do you expect to get done when in Africa?
So, you know, separating 2 institutions that have been together for over 100 years is a very complex thing. So that we could announce that we reached an agreement with Barclays Africa last quarter on a definitive separation agreement, which is now in the hands of the regulators both in the UK and across Africa. Once we get that regulatory approval, then we are unfettered in our ability to sell down our stake in Africa to a deconsolidated level, which is our ultimate goal. We've given ourselves to the 2 more years to do that. We'll do it when it's appropriate and we find the market accommodative to us. But very much we look forward to, in a reasonably short period of time, having the ability under our control of determining when we will make those sales in Africa. As we've said, even with the expense of separating from Africa, that will release about 75 basis points of CET1 capital. We had a very strong year-end print at 12.4%, so you can do the math in terms of 75 basis points plus the 12.4. So I think this has resolved the issue of, do we have the capital base that we need to manage this bank going forward? And I think we do. And Africa is going to be an important component to that.
So that's the story on Africa. I want to turn our attention to the United States and the regulatory environment that you face there, Jes, and expectations of growth in the economy. If Barclays were able to feel emotions as an institution, would it be more nervous or excited about President Trump?
I think we are very encouraged by the trajectory of the U.S. economy. Clearly, the markets are. I think we're very encouraged by the Fed getting back to a more normalized monetary policy. I think we're ending the days of accommodation. No one today talks about zero interest rates, and I think that's a healthy thing. So we look forward to where the U.S. economy is going right now. Having our presence, whether it's the credit card business in the U.K., our corporate banking and investment banking, in the U.S. We're encouraged by the trajectory there and very much like our footprint there.
If U.S. bank regulators decrease the amount of regulation in the United States, are you going to call on U.K. regulators to follow suit?
I think ever since the financial crisis, the G20 has been pretty consistent in terms of as they re-regulated the financial industry, whether it's the Fed, the Bank of England, the European Central Bank. I think the regulators have all been consistent in re-regulating in a way that created or that maintained parity between financial markets and maintained the free flow of capital, whether it was in the United States, in the UK, across Europe, or across the globe. So, if there is tweaking in terms of the application of Dodd-Frank in the U.S., we hope that would be considered, whether it's in Basel or whether it's in London, such that there is parity around the globe in terms of how the financial industry is regulated.
Is the U.S. regulator setting the agenda, though, Jes, or is Basel and the international community?
I think the regulators have been pretty collaborative across the board. I think the G20 has played a critical role in the tone and the setting of re-regulation. Like, obviously, Basel has been very important. And we would hope that between the G20 and Basel, this continues to be a collaborative and coordinated regulatory environment, whether it's the Fed or whether it's the Bank of England or whether it's the European Commission or whatnot. So we hope that that continues to be consistent around the world.
And just briefly on the UK business, UK retail, consumer lending, credit cards, do you see any Brexit effect in your numbers?
Well, obviously, I think everyone's very encouraged with how the consumer has responded to the Brexit vote. Consumer spending is up quite a bit, actually. Consumer credit is up. We don't think it's gotten to a level that would generate any necessary concern. But inflation is up, and I think one's got to keep an eye on consumer confidence as that inflation number goes up. But if we can keep the confidence level and keep the economy going, I think we're in reasonably good shape.